Hi guys, in this video we will talk about the basics of successful trading, because trading doesn't consist only of one element in order to become successful. No, it consists of several, and each one of them is important. You can imagine it something, you can compare it with a house. For example, a house that doesn't consist only out of one brick or one element. It consists of several. And the really essential, the supporting elements of the trading house, there are three ones that cannot miss in a trading process. Otherwise, it can't be successful. And in this video, we'll talk about exactly that. We will talk about each element that is essential and cannot be missing in your trading. And we're going to talk about what it is, and I'm going to show you exactly why successful trading is not possible without each of those elements. So let's start right away and take a look at the chart. Okay, the first element we're going to talk about is the strategy. And this is definitely the one that is most talked about. But you will see later on that it's definitely not the only one that you should take care of. But let's take a look at the chart first. If your strategy is not working well, this will definitely not lead into success. For example, your strategy says to go long here. You enter the market and then the market drops and your stop loss, for example, is too close. So you're out of the market before the market turns at this point here and going long. So you're missing all the profits that could have been in because your strategy is not consistent. Maybe your stop loss is too close. Maybe your target is not right. Maybe you don't have exact rules where to enter or exit at all, or not any strategy. You're just trading randomly, what's even worse. That's the capital curve that we want. Of course, we have drawdowns. We cannot go around this, so this is part of trading. But what we can do is to make sure that we always have the upwards phases again that are bringing us the profits. And of course, the upwards phases need to be bigger than the downwards phases. That's what we can do in trading and take care of with, for example, our strategy. But if your strategy is not working, like it didn't do in our example, then your capital curve probably looks more like this. Maybe also upwards phases, but the downwards phases are bigger than the upwards phases. And this leads to failure, of course. So definitely take care of your strategy in the first step. Only if your strategy is consistent and repeatable, it can be successful. Our element number 2 is the risk management. And the risk management is really essential for your trading as well. But in most times, sadly underestimated. And I've seen many people, or I've met many people that have really destroyed their account, totally blown it up because they didn't take care of their risk management. They went way too high in their positions, or maybe switched the position size from trade to trade, and it ended in a mess. So definitely take care of it. Let's make an example. You're doing a trade that is successful, for example. So your capital curve moves a little bit up, representing this arrow. And then you're taking the next trade, but since the trade before went very well, you're going the double risk. But as it can happen always in trading, this trade doesn't go well. But what happens now is not that you're losing the profit you made before. No, you're losing twice as much since you traded with a double risk. So your capital curve starts to look like this. And now you're a bit frightened because this didn't go well, so you're taking a smaller risk again. And this trade is going well again. and going here. So you're now, after 3 trades, 2 profitable and 1 loser trade, still break even. This is where you started and this is where it ended. And now you're repeating this game. The next trade you're still going with the first risk and also profitable. So this worked well and you're increasing the risk again. And of course, what has to happen happens, you're losing again. Then you're making one time your risk, winning, great. Then you want to make up your losses and you're increasing your risk again, but now you're losing. So you see, the capital curve is not going into the right direction. You're starting to make more losses than profits. And what I want to tell you with this example is you need to have a structure in your trading and in your position sizing. You need to know exactly with how much capital you're trading and which risk you're taking per trade and in which situation. We will go deeper into this in a separate video. This video today just contains the essential elements and why they are essential. And I will make in the following videos for each element a single video to make clear what you can do to make sure to have all 3 elements stable for your trading success. Okay, the third element is your mindset. And it's probably the most underestimated element of all 3 of them, but in really many cases, it's definitely part of the failure, especially among beginners. So please, people, do yourself and me a favor and give this element a high priority as well. Just a simple example. Let's say you're having here your entry position when the market is making a new high and you're going along in this direction. And then you're having your stop loss down here, because here was the last support and this might act as a resistance here as well. So your stop loss is fine, your target may be somewhere up here, but then the trading candles develop first in the right direction, but then go into negative with big momentum. And now you're getting nervous, and your nervousness makes you want to interact into the trade because you can't stand the loss. You think the market is probably making a loss now since it's making a new low, for example, and since the market seems to develop even further down exactly in this moment, you say, okay, stop, I will exit the trade. Even though your risk management is fine and you know that losses are part of the game and your strategy is working well either, but your mindset is just not prepared for it. In theory, it sounds simple, but watching the trades, watching them making losses is not easy. Therefore, you have to really prepare yourself. If you're not prepared for it, please do it now before you enter the next trade. On this, I will also make a separate video. So please, people, watch this video as well in order to prepare yourself for successful trading. This is what we want, a capital curve like this. But what happens in real life if you are interacting into your strategy? A winner trade becomes instead a loser trade. So your capital curve makes a loser trade instead of the winner trade. And after that, from the strategy, it would have been a loser trade. So it's going even further down. So what happens if you cut the successful trades because you get nervous? Your capital curve won't go into the right direction. It goes into the wrong one. But here you see the market turns and is going into the right direction, into the trading direction. Your strategy would have worked well. Your risk management was fine, but your mindset wasn't prepared. So you closed the trade too early and a winner trade ended in a loss. And this makes the relationship of losses and winners worse. So it's really destroying your capital curve. So please make sure that your mindset is prepared for your trading as well before you start trading again. That's it for today. If you want to learn more, please watch my next videos on each of those elements, how you can take care of them in order to have a successful trading process. And if you don't want to wait for the next video, click now below this video and there you will find the link to my Telegram group where you can get more information about more content of me and also my Signet group. Bye bye, see you next week.